Cool. Yeah, I think we should be. Yeah, I think we should be live. Okay, I think we are live. Let's see. We just make a quick post and we should be good to go. All right, if you're on the YouTube live stream, can you just confirm that you can hear me so we can get started? Please and thank you. Cool, awesome, awesome. Good to see you guys once again, another week. But yeah, let's go ahead and get started. Making sure everybody gets in. Excuse me. Cool, but how's everybody doing? Everybody doing all right? How's you guys' weeks? Any wins, any losses? Any non-participants? Really solid week, awesome. Two lost, one win, cool. Anyone from the YouTube chat? How was you guys' week? Anything good? Anything bad? Did you stay? Did you not trade? Did you trade? Cool. No trades this week. Learning from mistakes, all good. Yeah, no Spanish today, bro. No Spanish. Spanish was yesterday. Let's see. But yeah, let's go ahead and get started. So personally, I didn't take any trades this week. I was a bit sick at the beginning of the week, and I still am feeling a little under the weather. And outside of that, I had to coordinate a couple of other initiatives. So I just decided, hey, let's just take the week off. We can come back next week. But it seems like there is some decent moves, not necessarily every day, but there are some decent moves for news, and there was a decent move for yesterday, which was during the Asia session. So typically, when I don't take a trade for the week, what I will do, like except for example, today is Friday, right? We have a couple of hours until the weekly closure is done. So as soon as we close for the week, either in the evening or tomorrow in the afternoon, I tend to kind of just look back and see if there are any scenarios that I could have caught in real time. And yesterday on the Spanish Zoom, that's what I did for Monday through Wednesday. So usually what I will do is I will open up my sessions. I will go back to my replay. I will look into my New York session and see what exactly happened and why, right? So that I can gather some type of bias if I would have gathered some type of bias during the day. So easily for Monday, there was one scenario. It might not have been something I would have taken, but there was an opportunity here, right? Which is a structural disruption model. As we can see, right, our Asia session has been swept in. Obviously, if we are directionally bullish, right, I'm looking for liquidity in order to then give me an execution model so that I can continue that directional bias. That's usually the gist of what I want to do for the day. Where is the direction? Has liquidity been taken? Is liquidity pending? And can I find an execution model that will support the previous two statements, right? So I know that in my Asia low, I know that my London session volatility coming in here around mid London session-ish, a couple of hours after London has already started, there has been a sweep of liquidity. I don't consider this a full break of structure, right? Because we did not substantially break the previous low, right? And what do I mean by a substantial new low, right? Whenever we create a new high, let's say we create a new high here, this is a substantial new high. Whereas here, right, we have an unsubstantial new high because we only swept the liquidity. We did not follow through. That's typically what I mean with an unsubstantial new low and substantial new high. So there was an unsubstantial new low here because we swept liquidity and we came into the range. So because we came back into the range, I know now that I can zoom in. And if you're wondering, since I'm a scalper, I will typically stay on like my M5-ish whenever I'm looking to backtest for the week, especially if I don't take any trades. I will look into my M5, look into my session, and then zoom into my M1 30-second if necessary. So there was a structural disruption here. Where do you see the structural disruption here? You can see the high coming into the low, into the pullback being solidified. So that pullback being solidified means that we should realistically be continuing lower. We should be taking out our previous low here, right? So unfortunately that did not happen. So once we have, right, immediate reactions that solidifies, right, the pullback high, once we break through the pullback high, that is structural disruption, right? So once we have structural disruption in play, you can use the entire sell to buy to give you a region and then aim for the external high, right? Or you can zoom in obviously here to see if you could get a reaction. And if we zoom in, I believe we did not have a scenario. If I'm not mistaken, I don't think we had an entry. No, we did not, right? So we didn't have an entry here, right? Because the entry would have came, right, after we come into the POI, correct? We have a bearish break of structure, high, low, retracement, low, retracement, unwillingness, break of structure. So if you have the unwillingness break of structure, then I would want to take, right, the inefficiency into, right, the into my invalidation, which would be below here, because if this is internal unwillingness, the only way for it to be external is if we break out here. So if this is to become external unwillingness, we would need that full break, right? But unfortunately, there was no entry, right? We filled part of the inefficiency internally here, right? And we were not able to give that full move into the inefficiency fill so that I have my perimeter for my entry and stop loss. So unfortunately, there was no trade there. And if I was to have taken the full sell to buy move, the risk to reward really wasn't the best for me. I'll show you guys. The risk to reward here just didn't make much sense to me. It was like a 1 to 1.3. Yeah, so it's not really something I would have taken, right? So if there is no scenario for me to take internally, right? Yes, you could see that there is an internal structural disruption here, and then there's a buy. It's just there's no target, right? But that really would have been the move for the day. That would have been the move that I would have wanted for the day. But unfortunately, that did not happen. So for Tuesday, I believe there was another move, right? I'm only going to do Monday, Tuesday, Wednesday so that we can get to case studies. But for Tuesday, sorry, I believe there also wasn't a scenario that I could have played out because obviously we're coming into a continuation of the Tokyo session, meaning we have, right, a full structural range. Then we swept a high and unsubstantial new high here, which then created a bearish structural range. So we have a high, low retracement. That retracement then fulfills order flow, right? So when we fulfill order flow, I am not taking, right, the immediate continuation, right? This is something that I've spoken about a couple times over the months. I will not take the immediate continuation if we have swept liquidity after the leg has been fulfilled, right? Why? Because we've swept liquidity on one way. So in order to continue downside, we might need more liquidity, right? Which is usually what you have to anticipate because obviously nothing will continuously trend downward. You obviously need some type of pullback, right? Because we need liquidity and we also need to solidify our ranges, right? So typically that's what I will wait for. But here, I believe there wasn't a move because if you begin to zoom in here, right, the leg has been fulfilled. The order flow has been fulfilled, right? And from there, we get a strong bullish reaction, right? We have high momentum, we have some engulfing candles, and we have a straight move into the upside. So we would need some type of model in order to justify a move into the downside. So obviously, once we break through here, right, obviously there has been a failed reaction, right? I would not be selling here if there is a break and a retest into, let's say, the buy to sell here. That is not a move I will take. That is not a model, right? But because we do have the internal structural range here that breaks through the structure here, we need a transition, right? So obviously this needs to break in order for me to justify any continuation to the downside, right? But that does not happen. We have a low, high retracement, and that retracement leads us to take out liquidity. So once that liquidity has been swept and we break the structure here, that is now when I'm looking to try to find any move into the downside, right? Why? Because we've taken liquidity, we are in alignment with the external, and we have broken internal structure, meaning we have a bearish structural range internally, and this is the range that we would want to play. It's just I didn't see any any points of interest here. So with no points of interest, then it becomes a bit more difficult to find that move into downside. Sorry, that's Monday. I didn't see any point of interest up here, right? There was obviously inefficiency here. There is no real buy to sell. This is the entire region is the buy to sell. So this isn't something I would take. I wouldn't take something like that, a sell here with a stop loss here. So I would typically look for, right, an internal continuation maybe, but even then I didn't see any model play out internally, which is what we can see here, right? Maybe you can say that there's an LGC. I think that would have been a bit forced, right? Only because there is no point of interest that this is bouncing off of, right? The only way I would take a scenario here is if this would have reached into a turbulence point, an internal buy to sell, right? And then we have, right, the internal conversion so that I can then just use the entire point of interest, right? That being the buy to sell, right? The buy to sell. And then I would pursue for external liquidity, which would have been here. The retracement percentage doesn't matter, bro. I just need it to bounce off of something. It needs to bounce off of something so I know that the order flow is supporting it, right? This would have been right, a scenario if we would have touched my turbulence point. But unfortunately, right, we just didn't get that. But the cool thing is, as a scalper, like, you don't really have to be too picky, because if I do miss this move, yes, I could still potentially find another continuation here, or yes, I could find a transition here. We have, right, a potential sweep model where we have two equal lows, we sweep liquidity, we break the internal structure. Now, if there's a conversion here, then I can justify a bullish move, right? It can be very dynamic when I'm being a scalper, right? But I'm trying to focus on maintaining a high win rate. And the only way I could do that is if I'm maintaining a pro trend position that supports the minor intraday that's in line with the scalp. That's usually, right, where I get most of my winners from. Right, so the percentage retracement does not matter to me. It does not matter. You can, I mean, obviously, if you're a fib trader, then obviously it does matter. And let me pull up a fib. Right, because some people still trade that 61.8, right? And obviously we didn't reach there, but the 61.8 is still extremely effective, right? If you actually look into, let's see a trending move here. Like when we see an internal break of structure, the fib will still work, right? Obviously looking for gold in the pocket and invalidation is always our stop loss. So the fib does work, right? I've seen many people use it. I don't see why people don't use it. It's not necessarily a bad thing, right? It's actually where most of my roots came from, right? Which was the Fibonacci retracement, right? You can see that we broke structure here, and then we have a CBOS here. So you can have an internal structural range and it still comes back into the golden pocket relatively, right? But I also like fibs also for the fib extensions, just because they do give you some decent extensions here. Like let's say we were to take something here, we did not reach a 61.8. That's why we use the entire buy to sell, and you already have your, right, your fib extensions here. So because the fib extension, I believe, is an automatic 1 to 2 point something if you hit the 61.8. Yeah, but a 1 to 3, sorry, whenever you have your golden pocket coming into, right, your fib extension. But you guys know that I typically take my positions based on the candles that are given to me, right? I don't want to be perfect. I just want to be correct for a certain amount of time. So that's one scenario that could have made sense on a Tuesday. And then Wednesday is when it really made, which is something that I was actually watching. I just didn't trade. You guys know I typically tend to stay away from news. But there was quite a bit of momentum coming in as soon as, right, the news event hit. Right, the news event hit. We actually swept liquidity internally here. We swept liquidity here, right? So typically you guys know that the news will follow the technicals. And right before this entire move occurred, you guys can see that there has been, right, an LGC, therefore creating an internal structural range, meaning that the bullish invalidation is here. So unless we break through here, we are still technically bullish based on this range being given to us, right? But obviously the internal order flow, after we see the failure here, there is internal bearish order flow, so that you would need some type of transition, right? And if we zoom in, right, the only way you could have gotten a position here is if you were relatively aggressive with the execution, but relatively conservative with the region that you're trying to buy from. So we know that we took out liquidity. We know that the external is bullish, right? And we know that we've broken through, right, our previous structure here. So if you're quick enough, right, obviously you will only be in this entry for less than 2 minutes. If you're quick enough, you can justify taking a buy position from the sell to buy that caused the liquidity grab, right, which then caused the high momentum move, which was the news event. You can justify that, but you have to be quick, right? But that's obviously the life of a scalper, you know what I mean? Because from here, you would obviously want to pursue the highs that were made on Monday, right? Because that we're obviously externally bullish from a swing POE. So that would have been a clean 2.3. So that would have been semi-clean, in my opinion, worth it. But what's more important for me here is Typically, I don't like to trade the news move that is given to us right as the news move is coming out, meaning I don't want to trade usually the immediate move. I do see a lot of reversals just because obviously nothing will go up forever, nothing will go down forever. Something has to correct, something has to propel itself in the opposite direction, right? It's just how it goes. Trending markets, that's just how it goes. And if you wanted to be aggressive, you could have taken, right, a very impulsive move to the downside, and you could have justified a reversal up here. But more importantly, you could have justified a position here. Why am I saying here? Because obviously we have the CBOS, meaning this low has to take, right, a previous high because of the CBOS rule. But we have a sign of unwillingness, and then we have a break of structure internally, which also breaks, right, the internal structure here, right? This is the final solidified point, solidified low, right? That led us into the bullish move. So we have a low into a high, CBOS, pullback, failed reaction, but more importantly, there's a break here. And this break is very significant because it is the final structural range in play. So the only way you would have been able to enter this trade is if you would have entered based on an efficiency with my invalidation here, obviously at the previous solidified point. Because if we do break that solidified point after we break the slow, if we were to break that solidified point, that is now an LGC, meaning we have to justify the bullish move, right? So that's why that would have been my invalidation. But this also, you would have really needed to be perfect here because you're in the position or in the region, right? Which is this inefficiency here for like 20 seconds, right? So very hard trade to get into unless you get in off the retracement, right? But this would, in my opinion, be chasing it a bit, and the model really isn't there at that point because we are breaking internal structure in order to reach the internal POI. But there was positions here to be played, right? And even if you caught that, or if you didn't catch that move, right, there's also an internal order flow move here and here. You have to wait for confirmation, bro. There's too many aspects at play for you to want to guess, right? If you see a confirmation, then you have to take that position, right? Because if not, that defeats the purpose of the confirmation. I would regard this as picking a high for sure. This I would consider a hyper aggressive move. These I would probably consider more conservative, right? If you can justify any type of model here. So like the only model I could justify here is an LGC, which if we were to zoom in, you guys can see here. The reason why I'm considering an LGC here is because we are breaking CBOS here and then creating an LG, which favors the external. So no matter what I take within this range, if my invalidation is here, right, I can obviously take profit here, right? And I can see my turbulence point being here. So you could obviously take profit at the low, or you could hold off a little bit longer. You could see there's a CBOS continuation. So I can definitely guarantee my profit by putting my stop here, right? And then obviously once we have the CBOS, right, and then another CBOS, then here's typically where you would close, right, after you're seeing consecutive bullish breaks of structure, right? And that's the only place I can justify a model. I don't know if I would have taken that in real time because we are breaking internal structure. So it would just depend on how I read this break of structure. If I read it as, right, a potential bullish LG, or if I read it as a CBOS, which solidifies the high into the low, into the pullback. So as long as I interpret this a certain way, then I can justify, right, the LGC model. Right? Does that make sense? Cool. But yeah, like I said, no trades for me this week. Very boring week for me. But if you guys have some case studies you guys want to review, then right now is the time. Perfect. Thank you, David. Thank you. Mistrade. Yes. Okay. So this is this is something that I've also kind of I don't want to say struggled with, but it's something that I haven't put too much attention to. It's which sell to buy to use, right? Because here there are two clear sell to buys. If we are focusing on the general move, then where is the sell to buy? Sorry. Where is the sell to buy that caused the move that we are trying to play off of, right? The sell to buy that caused, right, the potential sweep model here, because this is a sweep model, is this break of structure, meaning that this high had to take this low, right, to then have the internal transition, which confirms the sweep model. That is what is giving us the bias, right? So you have to use the whole sell to buy, right? If you want to be conservative, but obviously there's situations where this entire sell to buy gives you a very high stop loss, right? Example being here, where the sell to buy, right, is relatively big, giving us a big stop loss, right? That's why I wouldn't have taken this trade, because the risk to reward just probably wouldn't have been worth it for me. Whereas here, it's going to be relatively the same situation, because obviously my TP1 is here. So if I'm using the entire region, then now this is like a 1-to-1, right? So if we're using sell to buys, we have to use the sell to buy that causes the move. But if we want higher risk to reward, then you can obviously use the internal move here as well. But we just can't disregard this, right? So where is the balance to it? You could say that the balance to it is maybe you use this as the entry, but you use the internal stop loss, right? Which gives you like a bit of a medium, right? Or you just avoid the trade in and of itself, right? Or you just accept that you just will not be able to take these types of positions, because yes, you're optimizing for risk to reward, but you're now putting yourself at risk of not entering the trade. So which one is more important to you? Getting in the trade, getting the best risk to reward, or getting the best entry? Like, what is your priority? So you got to kind of play based on that. But in my opinion, I think you always have to guarantee that you get into the trade on a proper bias if a model is shown. And you can set a stop loss maybe a bit more aggressive, like you did here with the invalidation, but with the entry being at the full sell to buy. Because obviously, if we are to break here, then that is now, right, an LGC, right? That's an LGC, because this is the final low that led into the high, right? So if that is to break, then you have an LGC based on, you could even say this high and this low, meaning you cannot be bearish, right? So it really is just a personal preference thing, and whatever decision you make will have certain consequences, right? Excuse me. Another bit of an awkward one. So this is EURNZD, right? And I like that you're transitioning over to the higher time frames, right? That's good. But the thing here is I am looking for a bullish move. I have a CBOS, therefore I'm anticipating the slow to take out this high, but unfortunately that gives us unwillingness into a break. So this is my bearish invalidation. Right now, the problem is internally, right, we have a CBOS, we have fulfilled order flow, and then we have a bullish LG, which means that internally this is bullish. Right? So because internally this is bullish, then I have to see this as a CBOS, just like this, a CBOS, meaning I still have to anticipate this to continue a bit higher, right? So once the pullback low has been taken, or I'm sorry, has given an internal reaction and then breaks, then I can justify a structural disruption. So this could be a structural disruption, meaning that my invalidation for the cells could be here, right? And also this is not a point of interest. That's not based on this time frame. This is not a point of interest. This is the point of interest. That being, you could argue this in multiple ways, but typically, where's the move that started that led to the internal break of structure? You could say that it started around here. You could start around here, right? So this is your entire region, or you could go based on the candle itself, which is that region, right? So you're using the bearish candle, which is wrong. The bearish candle is wrong. Okay, next one. Excuse me. Okay. So we have taken CBOS, taken out structure here. External is bullish. So we have to anticipate this to continue higher. Yes, so if we're looking at low, high, retracement, this is a non-substantial new high leading into the break of structure. So technically this candle is in play, and then this candle is in play. So yes, you have to use the full buy to sell, which is really good. So the entry is good, right? Hence why you came into the inefficiency, but you used the entire buy to sell. That's good. And then that gave you the momentum. Except my thing is, bro, is if you can find an internal entry here, then you can justify targeting here. Because after we target here, we don't know what can happen because we're externally bullish. Right? So this could really just sweep it and then go in the opposite direction. But you did your job by trailing your stop. So I would have trailed my stop here. Why? Because we have a CBOS and then we have a bearish reaction. So because we have a bearish reaction, I would just go based on the immediate high. So this would be my trailed stop here.
Okay, I understand. At the end, went to full profit, but I just trailed the stop loss.
Yeah, that's okay because that's a different problem now because this can obviously, right? If you try your stop, you can justify selling here again. It just really depends on what you're wanting, right? Because this is a buy to sell that broke structure. That's why I'm saying that this movement, the objective of this transition is for this external target. Then maybe the point of this transition here coming back into this pullback is then to be targeted here. And that would have been my take profit. That's why I always look for internal transition, external target. Internal transition, external target, right? Is that what happened here for GA? What day was this? The 18th of September? Yeah, see what I mean? See what I mean? We come back into the buy to sell within targeting here. That's why we target the external move because we don't know what can happen afterwards. And you can see there's an internal sweep here with the bullish engulfing. You see what I mean?
Yes.
So maybe this could be the objective of here. And let's see, because you need to know what the point of the order flow that you're trying to trade is, right? So that would have been a 1 to 2.5, which is good. I'm not opposed to that. And then you have another position, which would have been about a 1 to 2-ish. Yeah. So maybe not as appealing, right? But it really just depends too. Like you just have to understand that the point of this transition is to take out this liquidity. And the point of this transition is to take out this liquidity. Right? And then obviously there's the buy to sell that you regioned here. I mean the sell to buy, sorry. This is the sell to buy, I'm assuming, that you put here.
Yes, exactly.
Yeah. So
was like a external target.
Yeah. So not bad, right? But you can also trade the buys too, because obviously you have the point of interest, then you have, right, the engulfing candle, meaning that the engulfing candle causes internal moves, and you can see the sell to buy here. You can see the sell to buy here.
Yes.
And you can target the external move, that being a 2.3, right? And if you're trailing your stop, then this is how you would trail your stop, being the break here, CBOS, continuation, trailed stop, right? Then we have internal CBOS, continuation, trailed stop, right? And then where is the next CBOS? Here, new impulse, trailed stop. See that I didn't touch it. So we have CBOS, continuation, trailed stop here, right? And then you have that going into the take profit, right? Actually, let me confirm that didn't touch. I don't want to Let's see. Maybe he did, maybe he didn't. Very close. Very close. But yeah, you see, this is also the problem with trailing your stop to an extent, right? Stuff like this can happen.
Yes, in fact, I leave like a few beeps.
Mm-hmm.
So I give it, the time of a little sweep. So if
Okay.
it sweeps,
Mm-hmm.
we'll continue.
That's actually smart. Yeah, that's actually smart because you're anticipating potentially a sweep of the liquidity there. But yeah.
Yep.
Or you could even go like 2 levels behind. What do I mean by that? Like you can, if this is the trailed stop that you should be, maybe just keep it at the first trailed stop and then see what happens here. And then once you have the second move, now you can move your trailed stop here. You could go based on impulses, right? So it's really personal preference as long as you have a rule for it. But for me, I don't want to trail as soon as I break, right? I don't like to do that. As soon as we break here, trailed. As soon as we break, trailed. As soon as we break, trailed. Because then eventually you're going to get burned before you get the move, right? Because we don't know, like, I don't like to trail my stop like this because we don't know when the CBOS is going to come. So I'd rather just wait for the CBOS continuation and then trailed stop. Okay, so let me see. Next one. This is a bit of a loss. Okay. I need a bit more context here. So there's a sweep here, okay? There's a sweep here as well. This is a substantial new low. There isn't like a big impulse here, but more importantly, there is a break of structure after the sweep, meaning you have an internal liquidity grab. So therefore the internal is bullish. So if you want to take a sell here, then for example, once we react, I would need this reaction to then break through the internal structure. And then this would probably be some type of model. And then that would be the potential execution. I would need a model here because of the bullish LG.
Okay. Okay, I understand.
Mm. Yeah, this one, the only reason I wouldn't have been confident is because we are bullish. So this pullback, I'm anticipating this order flow to take out this high. But if you wanted to play the internal move of that, that's now a different story, right? Obviously now you're settling in with the major intraday timeframes. So that's level 1, right? Level 1 is being able to stick to a certain time frame and being able to stick to certain targets. And then level 2 is when you can either expand your take profits or trade the internal models of the bias that you're doing. Meaning, if you're on H1, you can now probably zoom into an M5 because there's a POI here, right? The sell to buy inside there. There's a reaction. There's order flow disruption. You come into the buy to sell. And the point of this buy to sell is to then target the previous low. Right? That's kind of how I will make my plays internally. Right? And this alone is like a what, 1 to 3 maybe. Right? We can actually check this out too. The 20th, this was today.
Yes, right now I'm like sticking to the 1 hour because I see more clear moves.
Yeah.
If I go like to M5 to M30, it's really dirt. So I stick to 1 hour and then step by step I will go like to lower time frames.
Yeah, the biggest advantage with trading like H1 is that your entry time or your barrier of entry into the position is pretty high. You're probably in a POI for like an hour, 30 minutes, so that gives you enough time to actually execute. But here's what I mean. Like if I was to play the internal move, right, there is a point of interest, right? There is the internal reaction, meaning this was confirmed. So once we break through, that is order flow disruption. I could use the whole sell to buy to sell, sorry. Use the whole buy to sell. Right, so here's kind of like what we talked about in your first trade where you have the full buy to sell and then you also have like internal buy to sells. So I'd rather just use the whole thing. Right, and then obviously I'm targeting external liquidity. Right there. So we have CBOS continuation. So once we break through this initial move, right? Then I can move my stop here, right? And then once we have CBOS here, continuation into the downside, then I can move my stop here into stop profit. But yeah, this is what a position I would have taken based on that reaction. I wouldn't sell based on the reaction. I would look for an internal move. So maybe if you had this move on an H4, then on an H1, you can trade the internal, right? But that would be level 2, right? Right now you just want to stick to your time frames. Okay, next one. Okay, I like this. You can see that there's a clear liquidity grab here, which caused the sell to buy, and you use the wholesale. So I would use the wholesale to buy, right? Just make sure that you get in the trade. Like I've said before, make sure you're in the trade. Don't try to be perfect. Because if you are to then miss here, then you have a POI, you have the reaction, and then now you can justify a move within that structural range. And this would have been your continuation. But yeah, you were looking at BTC. Yeah, but these concepts work everywhere. It's pretty neat. Excuse me. OFD, yes, sure. OFD, sure. Right? That means that now your invalidation internally is here. And even here, you could even justify a fib if you really wanted to. Okay, so yes. So this is what happens when you use the appropriate structural level, structural execution with the proper target, right? Because I don't want to see, like, let's say you zoomed in at like a M15 here. The point of this transition is to take out this liquidity, because then who's to say that the taking of this liquidity is now the catalyst for us to go higher, right? But if you want to catch the entire move, that being everything over here as well, then you have to put your invalidation here. So if you have your take profit here, then you can justify the immediate continuation. But if you want to target the external of the external, then you have to put your invalidation here. Does that make sense? Does that make sense? This is good. Internal target, internal model, external target. Cool. Yeah, you're over here on YouTube. Yeah, no worries. Thank you for being on YouTube. You see what I mean? Internal model, external target. But if you want the external of the external being over here, then you have to use the proper perimeter. Right? So this is now a 30 minutes, let's say a scalp versus an intraday scenario. That's what it is. Right? So that's why I say you have to really understand what type of trader you want to be, and you have to trade the timeframes that correlate with that type of trader. So this is a scalp trade, and the scenario that I'm saying, which is the entire sell to buy, right? You would need to use this entire perimeter for the external of the external. But if you try to correlate them, then very often you will see like yourself get swept out. So just stick to one. And then maybe as you get more experience, you can then mix the two, and that's how you get high risk to reward. Okay, neat colors. Very aggressive news-related reaction. Yep. So, but there is a reaction. You have to note this is the reaction based on this POI. But more importantly, the model is everything. The model is 100% everything here. Good. That there is an LG. Like, you guys understand that the basis, like, if you guys had to, just a question for everybody here. If you guys had to tell me the top 3 things within our style, what would they be? I'll tell you them after you guys answer. What do you guys think are the top 3 things? Just to learn the RCV style. Tough question. I've never asked that. No. Like, what specific concepts? of structure, liquidity, and model. What are the DLE, the direction, liquidity, execution? That's just a frame. I'm talking about the concepts. No, think more simple. What creates a liquidity sweep? What creates an SD? If somebody gets this, okay, structure and solidified points. Well, solidified points is structure. Yep, solidified points is number one. Number two is the LG, right? And what do you guys think is the third one? Because these are probably the most important two things. If you can understand solidified points and you can understand LGs, you will be fine. Why? Because the SD, the OFD, the LGC, and the sweep model are all different types of LGs. The four models are different types of LGs. And why do we need an LG? Because an LG creates a structural range, which gives us a perimeter to put our entry and stop loss. Right? I mean, honestly, I don't even know what to put for the third one. I would say these are the number two most important parts. Solidified points, liquidity grabs. It's probably the most important thing. I would say probably the number three is what we just talked about with knowing the type of trader that you are. I think that's the number three. Because you could read solidified points, you could read LGs, but if you don't know what time frames you're supposed to be on based on the type of trader that you wish to be, then it becomes difficult. So I would say that's probably the three things. Know what kind of trader you are. Know how to read solidified points, because if you can read solidified points, you can read structural ranges. And if you can read LGs, then you can probably read entry models. Does that make sense? So yeah, like perfect example, right? This is the perfect example of understanding the type of trader that you are based on the types of scenarios that you want with the targets that you are meant to pursue. This is like the perfect example, right? But yeah, let me see. This one, back to this one, right? The structural disruption, yes, because we're looking at a high, low, pullback, solidification of the pullback, and then break of that. So you took the whole move here, right? This is good. But if you are taking these immediate trades, like pretty much taking the position after the SD is confirmed and not waiting for the pullback, right? That's why you put your stop loss here, because you might have to anticipate this coming back into some drawdown. Let's say we come back into the internal move and then have the move into the upside. So that's why you got to have your stop loss here. So that's good. And then, yep, trailed stop 1, CBOS continuation, trailed stop 2. And yeah, this is good. Yep, exactly. You got to know what kind of trader you are. You got to understand solidified points, and you got to understand LGs. That's pretty much the foundation of everything that we do.
But it didn't reach the target. It didn't reach the target.
Uh-huh. So what am I looking at here? What am I looking at here? All right, I don't know what I'm looking at here. Unless you explain what I'm looking at here, I'm gonna have to move on. Because here, if you want to make this super simple, high, sorry, let me start over. Make that a circle. This high is solidified after this break. This low is solidified after this break. So we have a bearish structural range, right? Number 2, we have a buy to sell. So this is my area of interest. This is my take profit being at the low. And that's a position there. And if you wanted to take something based on the internal move, okay, let's say we come into the point of interest. There's an internal structural range here, right? Then there's the break. So if you want to take a position back into here, then you can justify continuation to the downside. So level 1 is what I just showed you. Level 2 is the transition.
So what about entering below the 5 minutes inefficiency?
You're talking about this? Are you talking about this?
No, the 5 minutes, the one I tag with 5 minutes in the yeah. The entry there.
Well, what kind of trader are you? Are you wanting to catch the entire move? Or you just want to catch something, a micro trade? Like, this is what I mean. You got to know what kind of
Micro
trader you are. You see what I'm
micro
saying?
trade. Okay.
Okay, yeah, this guy doesn't. No, let's move on. Okay, any more case studies, boys? Any more case studies? Yeah, one more, sure. Okay, let's see. So this is the first move. That was really good. Now my problem here is the stop loss, right? Stop loss is very aggressive. Just use the invalidation. Why? Because there is a break here, CBOS, but you can always still anticipate maybe there's a low high retracement and then that this is still meant to be taken out. So I probably would have waited for seeing this break and then seeing this break. Why? Because there's potential OFD here. And then you can justify coming back into the range and you can put your stop loss at the invalidation. And then you could sell anywhere here, stop loss there. Because these are CBOSs, right? It's a continuation break of structure, right? There's been no internal reaction yet, right? So if these are just breaks internally, because we've already broken a high here, then I have to anticipate, right, for this leg to fulfill itself into here. I still have to anticipate that. So then if we have like a sweep, then I can take a position, or if we have unwillingness, which is what happened here. We have unwillingness, and then we have internal OFD. We have high momentum coming in here, and then you can justify the buy to sell. It was moved? What do you mean it was moved? You mean the stop loss was moved? I don't know. Okay, so your stop loss was here at first? How do you know that? Well, brother, ask yourself. That's your decision to make. That's not a decision that's made for you. That's a decision you make. The OG was the high. Okay. Okay. Yep, Hafiz, you have a lot of studying to do, bro. You have a lot of studying to do. I'd recommend you to lock in for a couple months and then come back. Oh, oops, sorry. I removed the YouTube chat. Sorry about that. Second loss this week. Yep, kind of a similar situation. Bro, it's like we have to acknowledge models even if we don't play them out. It's like, what is the point of this model that is being played out here? If we've taken out the sells, then more than likely we're going to take out the buys, right? Similar to the movement with that news move. Let's go back to that news move on gold. Right, we don't want to confuse ourselves here with this being a bearish break of structure. Excuse me, this being a bearish break of structure in comparison to it being a liquidity grab. Let's zoom in here. Right, because like we acknowledged, there is the bullish structural range that caused the LGC. That is the model that's in play technically, right? But internally, we said that the order flow was bearish, right? So because the order flow is bearish, you can anticipate some type of bearish break. But we see here that there's 1, 2, 3 lows, liquidity being built, right? And then once we take the buy side here, right, we then take the sells down here, right? But we have to still acknowledge that we are bullish externally. So now that we've acquired a lot of fuel to the downside, the objective here is not to continue structure and look for the continuation sell. That's why I say we don't take sells right after we take liquidity, or we don't take continuations after we take out liquidity. We have to anticipate this as being a run on liquidity to then pursue the external, because it is aligned with the external structure as well. That's why direction is number 1, liquidity is number 2, execution is number 3. Let's see. So coming back here, we see the model is in play. Right, there is a sweep model here that we have anticipated. There's a run on liquidity, failed transition, break. Right, so we have a sweep model. The sell to buy is in play. So I have to know that internally we are bullish, right? Just like here. If this is a low into a high, CBOS, I have to anticipate this pullback to take this out. I have to anticipate that. Right? Because the structure comes before the order flow and liquidity. So the structure here is telling me that I'm still technically bullish. So the only way I could be bearish is if we sweep this high or if we break this low, because this low has been solidified.
Okay, I understand. Maybe I took this trade because I was revenging from not taking the long on there. So I was kind of troubled by this maybe. But yeah, I understand now the full point.
Yeah, so if you miss the sell to buy, take the next one. Because the bias has been built, right? So you just want to continue the bias. And therefore this being your target. And even here, you can see that there's another internal move trend right there. Right? Maybe not the best risk to reward, but it's still a winning trade. Yep, still good progress, yeah.
Thank you.
On that trade, it looks like the market already pulled back and created a new low. After that, we had a model transition to the upside, which now shows its willingness to continue higher. Exactly. So until the order flow or until the structure is broken after the model has been built, then we cannot justify the opposite direction. Right? Does that make sense?
Yes. Yes.
But yeah, also
sometimes I don't think like full trade, like full buy to sell to buy region, because then the risk reward is like 1 to 8, 1 to 2. So most of them you just don't take it. I just see how they play out. But this one is what catch me, because then I go on over refining, and most of the times I either like lose the trade, like in this case, because of revenge, or like I miss the trade sometimes. But it's just part of the progress, I think.
Yep, it's just what are you willing to sacrifice, the win rate or the risk to reward? You have to choose one. Because you have to be very skilled to have both.
Yeah, okay, the risk reward, let's say. I prefer to be in the trade.
I would say I'd rather win the trade, bro, if I'm being honest. Like, I'd rather win the trade, like because consistently winning, that's very good for the psychology. I don't know if your Notion link is gonna show, bro. Let's see. I don't know if that's gonna show, but yeah, it's your Notion link is not gonna show, bro, and I'm not gonna set up my Notion account on here. You have to send a screenshot or you have to send a TradingView link. Yeah, but it's not because you're focusing on RR. It's because you're focusing on RR, which is causing you to either miss trades or lose a lot of trades. That's the part that messes with psychology, not the pursuing of the risk to reward, but the effect of pursuing risk to reward. That is what messes up psychology. Hope that makes sense. It's not the cause, it's the effect that messes you up. Yeah, there was a big issue with that. I mean, bro, like, I take full responsibility for that. That was 100% my fault, right? That was 100% my fault. The whole big risk to reward issue, that was 100% my fault. I take responsibility for that, but it's whatever now. We won't name other people, but you guys know where it started. But yeah, now I think the niche has changed a lot now. Like I think a lot of I don't even know honestly because I wouldn't say I'm fully involved. But the niche now is very I think it's back to where it used to be, where people are really just attracted to the whole like money side of things. Like people are really attracted to the lifestyle again. Like I'm seeing a lot of people get transitioning back into that, and right, because there's multiple sides to it. There's the dummies that kind of just are wanting to pursue that lifestyle, which is obviously unrealistic, right? And then there's the other side where it's just like, hey, show me literal bank statements. If not, you're nobody. And I'm just like, bro, whatever. Like, you're tripping. We've been doing this for months. I will show you the progression of people that are on these calls for months, and I think that is the number one setting of proof. Let's see. Okay. Internal break after we take in liquidity. Internal break after we've taken liquidity. Okay. But yeah, hyper aggressive trade though. Hyper aggressive. Hyper aggressive because you have a low, high retracement. I still have to anticipate this to be ran. So this is extremely aggressive. Yeah. It played out, yes, but it's just a matter of how often will it play out. But I didn't see any other transition here. I didn't see the transition. Because yeah, these are like unicorn trades. Like, you know, like you will lose a lot of these in order to get this one big winner. And exactly, it would be a CBOS. You get a lot of losses in order to get this winner. And it's just like many people aren't willing to do that, right? Or people give up, you know, a couple of losses in. But yeah, no worries. I'll see you guys on the next one. Used to call that church. I don't care about what these other guys are doing. That was a big trend too for a while, and it's just like people are trying to take credit for creating the concept. I'm like, bro, like stop. Like you look goofy. Like, just kind of have to stay in our lane, guys. Stay in our lane. But yeah, any final case studies, or can we wrap this up here for the day? Well, I guess we can wrap it up here for the day. Thank you guys for hopping on. I will see y'all next week.